India's commodity derivative market has seen a series of changes. Volumes dropped in agriculture after SEBI suspended trading of 7 agri-commodities including wheat, paddy, chana, mustard, moong, among others, till December 2023, with the aim to control inflation. Previously, SEBI had banned trading these commodities till last December 2022. Hello and welcome to Commodity Champions. I'm Ashok Gautam, and to discuss the outlook for 2023 for the commodity derivative market, I am now joined by Mr. Arun Raste. He's Managing Director and CEO at National Commodities and Derivatives Exchange. Mr. Raste, hi, thank you so much for joining us on CNBC-TV18. It has been a challenging year 2022 for you, whether it was about government controls, contract suspensions, bans, etc. What is it that you're taking as in sense of learning from the year gone by?
Good afternoon, Manisha. It's good to be here in 2023. 2022 was challenging, but every challenge, teaches you something. So for us, the learning was, one, you need to go beyond the conventional agri basket that we were specializing in. We need to get into commodities which are not so sensitive as far as the housewife's budget is concerned. And we need to grow the market both depth as well as wider reach. So that was a learning for us. And with that learning, we are getting into 2023, scouting for new products, which will be interesting for markets as well as market participants, and which will impact a lot of the stakeholders positively. So that is our learning from 2022. And we are very positive that we will be doing well in 23.
Mr. Raste, the last year, while it had its challenges, we also saw FPOs in number continue to increase. You've launched newer commodities, whether it was steel or coffee for that matter. And then the markets are looking at options and index trading as well, not just futures. How has that number worked out for you?
Well, coffee, the contract actually, though we launched it in September, its effective date is February onwards. So we don't know how it will shape up. But since coffee is the second largest commodity consumed globally every morning, we are very sure that we will do well. And our coffee, contract will be mirroring the aspiration of the young India. As far as steel is concerned, it is the largest commodity, industrial commodity, and twice it was launched earlier in different phases. It didn't work, but hopefully this time it will work because we have seen so far the traction is good. So hopefully steel should do well for us in this year.
Mr. Raste, I was talking to you earlier and you mentioned that there are nearly 91 commodities that have been approved for trading into the derivative market. And our number, the final number that we see currently, is quite small. How many commodities are we trading right now? And do you have plans to introduce more commodities into 2023?
So that was one learning from 2022. What we did was we looked at our own exchange and what were the products which we had launched earlier and we had to withdraw. And then we also looked at some of the other exchanges which closed down and the kind of products which they had. So we scanned and we realized that there are commodities like Isabgol, which are very specialized in, say, Ayurveda and medicines. It was doing well, and somehow it was, withdrawn by that particular exchange because that exchange closed down. So we looked at Isabgol and we are launching that in this particular year. There's one growth area which everybody is talking about, right from UN Secretary General and our Prime Minister, that is carbon credits. And hopefully, India will be a carbon credits positive country. And we see a lot of scope in carbon credits. And that is one of those 91 commodities where futures could be launched. So we are looking at that. We have already, formed a product advisory committee for carbon credits. And hopefully by this year end, we should be through with our work and submit our proposal to the regulator for launching carbon credits. Having said that, last year, as we started this deal, we are looking at non-agri space. So we'll be looking at a couple of other, metals, and definitely we'll be giving you some news going forward.
All right, I will wait for that. Mr. Raste, also, this is about instruments and commodities that can be introduced, and this has been a positive, really. As you said, the optimism clearly is brimming when I talk to you here. But what about the participation? Because institutional participation still is missing. Would you say that the change in contract specifications is yet another thing to look for?
So institutional participation is, missing on two counts. Some of those, like, say, FPI is not allowed in agri at all. So unless that happens, they will not come in. So it has to be a regulatory measure for that. As far as other, domestic institutional participation is concerned, there are 2 or 3 different kinds of people. It is either the alternative investment funds or mutual funds. 1 or 2 have started, but the number is still to grow. The reason why it is not growing is commodities is still seen as a very, very specialized and niche market, and not many people understand. And there is a fear that if something goes wrong, what will I do with the underlying? So therefore, we need to look at products where the financial sector players will not have to worry about the underlying commodities, and they can still deal with it. So that is something which will, going forward, which will be our focus area.
All right. And you know what, Mr. Raste, the exchange heads now can't just be exchange heads. You have to be an academician. You have to be a person who's sensitive to political movements, also global movements. And 22 clearly has taught us that as well. So whether it was about COVID lockdown and the increased consumption that we saw after that, or the supply shock that we saw coming after Russia, Ukraine, etc., how have you been able to manage that? And what are the learnings from there which you are implementing now in this year?
So there are 2 or 3 learnings. Under our IPFT program, we were so far concentrating only on a small set of investors. But then we realized that there is a huge set of investors which suddenly came into the market in last 2 years, especially in equity markets, thanks to Zerodhas and upstocks of the world. Now they haven't come into commodities market because, as I said, the commodity market is considered as something which is a little tricky, which is a very difficult market. And then we realized this need, and therefore what we have targeted is this time we're getting into universities and colleges. And there, right from the undergrad to graduation level, we are looking at teaching people on commodity derivatives. So once we invest into people who are in their 18 and 20s, they'll be invested into commodities for next 40, 50, 60 years till the time they are earning. So that is something which is a big learning for us.
All right. Just to wind out this conversation, I have a final question. And this is about, while clearly, I mean, as you said, talked about commodities and, the inflation concerns and the every measure, whether it's about import duty, tax duties, stock limit, etc., does impact commodities in some sense. How are you working with the government, sensitizing them, ensuring that they also in some sense come on the platform, make use of this?
Again, 22 taught us something very interesting. So, there are 3 kinds of, training programs which Lal Bahadur Shastri Academy conducts. One is for, freshers, those who join IAS. One is mid-career, and one is senior. And fortunately for us, they have given us opportunity to, come and speak to the IAS officers. We have started with that. Then we have started with NABARD and SBI, the bankers. So we are reaching out to people who matter in this particular field, whether it is bankers or whether it is administrators. We haven't gone into political class, but hopefully going forward, we'll do that as well.
All right. So there's a big list of what needs to be done in 2023, and Mr. Raste clearly put out that list for us. Thank you so much for joining us, and we have a lot to look forward to when it comes to agri-commodities, to NCDEX itself, when it comes to launching more commodities going forward there. With that, we'll go for a short break, but don't go anywhere, because when we come back, we have a discussion with Ashok Gautam, Managing Director and Chief Executive Officer at India International Bullion Exchange, coming out after this break. Welcome back to Commodity Champions. And India launched its first international bullion market in July last year, conceptualized to provide a gateway to import bullions into the country. IIBX will allow resident qualified jewelers to import bullion directly. IIBX has 75 qualified jewelers and 11 trade income clearing members on its exchange currently. India's gold market is one of the largest in the world, and the third quarter of FY23 was the best for gold since June 2020. COMEX gold prices began this year as well, near a 6-month highs, and the MCX gold is trading at a 30-month highs. So how will the Indian International Bullion Exchange boost India's role in global markets? To discuss exactly that, I am now joined by Mr. Ashok Gautam, who's MD and CEO at IIBX. Mr. Gautam, hi, thank you so much for coming by. 2 quarters young, and the PM himself inaugurated IIBX. How is the pressure, or how's the josh after these 2 quarters?
Before I start, let me wish a very happy new year to you and the audience. I think the josh is always very high, and 29 July is a day which we can never forget, when Prime Minister of the country came to gift IFSC to launch IIBX. And I think he also set out a roadmap for us, and that India at some point has to emerge, not some point, quickly has to emerge as a price influencer and price setter going forward in various commodities, and gold, obviously, that was a exchange which was being launched. And we are now working to meet that high aspiration which has been set for all of us. And I'm so thankful that we have a regulator in IFSCA which is so progressive. We have a phenomenal governing board, and not only that, we have seen some very top ranking government cabinet ministers as well as the various secretaries visit to IFSC as well as to IIBX. And that only tells that there is a huge confidence in IIBX by the government and various authorities. And now the onus is on us, and also onus is also on the market, because this exchange essentially has been created for the market.
Industry, yes.
And it has two parts. One is the international market and second is the domestic market. With your permission, if I can just talk about the domestic market first and what all we have done. And
Absolutely.
yeah. So Manisha ji, as you know, Q2 is when we got launched and Q3 is something which we saw. So between Q2 to Q3 itself, we have seen gold import in India through IIBX almost to 2.78 times jump, which is 178%. Numbers are small. I'm not saying that they are any big, but this only tells the direction. And if this direction continues, I think we have a winner at hand. What I'm also going to say that during this time, we have not only said that we have launched a T+0 contract, we have also listened to the market, that what market is saying. As you know, today we have vaults in GIFT IFSC. We have 3 vaults there. So the market has been saying, how can you give us the gold soon at our doorstep? Because today they are very used to of taking gold by paying rupee, and within the same day they get the gold. So we have taken various steps to it, and if through your channel I want to tell everyone, second important date for IIBX in this small journey which we have is the 11th October, when we demonstrated to the global exchange market, and we conveyed this in our Dubai conference and the LBMA where we attended, that day the gold came, the dollars came, the trade happened, and 77 kilogram gold got shipped out of GIFT IFSC vaults within one day. Now we want to compress this cycle, and we also want to ensure that this gold gets delivered across India. Government of India has already permitted that in SEZs, we can have IFSCA approved vaults on which the work is already on. This will take some time, 3 to 6 months, but the direction is very clear, and we are very well working with the regulator, authorities and the vault operators. And second thing is I'm very excited to share with everyone what we are working on. T+0, and when I say that I want to move from T+0 to T+30, everybody gets shocked. What I am talking about? You know, what I'm talking about is that we want to settle the T+0 trades within 30 minutes of the trade happening. And this will be a every 30-minute cycle. We have already tested it. We are in discussion with our depository. And once we are ready, we will go back to the regulator, bring our case to them, and I'm sure they will also approve it.
Very aspirational, I would say, from 1 day to 30 minutes. I mean, you clearly are making records there. But I also want to talk about a recent circular that came, and that was about hedging gold as well into IFSC via IIBX. What does that mean? How are you working on that?
Manisha ji, this is something which is a game changer. As you know, long time back, the entities in India were allowed to hedge outside. Then it was decided only on the exchanges in India, in INR, the gold price can be hedged. Now, Reserve Bank of India has permitted that all resident entities, except individuals who have exposure to the gold price risk, they can do the hedge at the IFSC exchanges. That is, so with this Reserve Bank of India circular already coming in, and we are already in discussion with our regulator. We have been directed, and we are having our board meeting soon, where we'll be taking the contours of the product, which is the gold futures. And maybe next time when I speak to you, we would have already told you that yes, our gold futures product is ready, and we can offer the hedging mechanism in terms of dollar for gold price risk through IIBX. And this is something which is very amazing. So step by step, you see how it has happened. Qualified jewelers enabled by DGFT, IFSCA issued various circulars, IIBX came into being. And then second step, Reserve Bank of India permitted dollar flow. Advanced dollar can be sent to trade on IIBX.
Direct imports.
Then Indian banks, they were permitted to become professional clearing members on IIBX. And now we have this. So there is a direction in which we all are working. And I am sure that IIBX, which is for Indian bullion market, will certainly meet its expectations.
All right. Let's talk about the future here as well. And as the new year opens, I'm sure you have a long list here as well. As you were telling us earlier, whether it's about metal loans or export markets as well. And then, of course, the SEZ to SEZ transfer that you talked about, the work is already in progress.
Thanks, Manisha, for bringing that up. So we are working on two very distinct pieces. One is because in the T+0 itself, this is trying to replicate or replace the consignment model which is already there. So we discussed with the regulator and everybody, and including the Ministry of Commerce, that we would also like to provide gold to the exporters of jewelry through IIBX. So the SEZ to SEZ transfer is an easy thing to do. So qualified jewelers who are in SEZ can take the gold through us, and so obviously for that SOP is the working, SOP work is on, that will happen. Second is those who are having advance authorization, for which we have already represented to our regulator and they are talking to the relevant authorities. And later, something which I want to tell, and I'm very excited to share this information, that ICE Gate work is on. So GIFT SEZ will get integrated with the ICE Gate. Now, once ICE Gate gets implemented, then the qualified jewelers who are in DTA area, they want to take gold, duty-free gold by paying bank guarantee or bond or whatever customs stipulate, they will be able to take it through IIBX. Market opens up for them, and a transparent market on which we believe they will get a very good pricing through our exchange. It becomes available for exporters, and we will become a great fillip to push the export of gold jewelry from India.
So while lots is being done, I'm assuming there's a bit of a heartache somewhere, because when you look at the gold prices in India, they were trading at a discount. Did you, heading IIBX, feel that pinch?
Absolutely, Manisha ji. If you see the domestic player, initially, so we have an international piece which we have not yet discussed. So the domestic piece which we are talking about, that gets influenced by what the price where they are able to get in India. And if the prices which we have seen even the discount up to $28 plus to the international market. I mean, nobody will actually come in this scenario to IIBX to take the gold. But despite that, some people have come to test their processes. They've taken a bit of gold here and there. And I believe today also some transaction is happening, because the qualified jewelers are excited. They are looking to connect, and they are also testing by doing some test trades, their back office, their mid office, and their old systems. But just to obviate this problem, if the market remains in discount for foreseeable future, that's where we are now talking about the gold to be made available to the exporters of jewelry, which is not dependent on what price is prevalent in India, largely. And second is also on the gold metal loan and the gold lease products, for which regulators soon will be coming up. I don't want to preempt it. We'll wait for it. Once that comes, we'll tell you about our readiness. And to me, that would be another step which
big
market.
Leap. We're not talking steps here. We're talking jumps here.
But Manisha ji, I just want to say it's a very hard work, very consistent work, and everybody is working together to make this a success. And I want through your channel to tell the whole audience that this exchange is for you. And it's because you wanted this, that's why this is there. And I would like you all to, start taking the benefits of IIBX.
So right now it's only gold, but in your conversations, in our earlier conversations, you also mentioned that silver would be the next one here, because silver imports into India this year, rather 2022, have been at record highs. How would that work for you? Is the work already in progress for that?
So, Manisha ji, we have already represented to the regulator, because when the DGFT notification came, it came for the gold only for qualified jewelers. We have already represented. And you talked about 1 year, I'm saying 1 quarter. So maybe in this quarter, we might get some good news on the silver side also. Once that happens, then so we will have gold, we'll have silver. And maybe, I don't know how much time you have, we will also want to talk what we are going to do for the international piece.
I think we have a couple of minutes. Please
quickly, I'll tell you. So we also want this IIBX to be the destination for the gold capital of the world. So we have the bullion depository receipt, gold or silver. So the investors who want to invest in physical gold and silver, IIBX provides an opportunity in the digital form, which is the BDR. And tomorrow, we can work out with various partners where this digital BDR can also be tokenized for a smaller lot to be offered to the NRIs and PIOs. All these are,
Limitless opportunities.
Limitless opportunities. And this is an amazing platform which has been created with the blessings of the government, with our regulator taking all the frontline steps. And we are just trying to, do our best to meet up to the expectations of everyone.
And we are just 2 quarters young, and there is so much that has been done and so much that can be done. Thank you so much, Mr. Gautam, for coming by and giving us a very detailed sense on what to expect from IIBX going forward. But with that, it's all the time that we have on this edition of Commodity Champions. Thank you so much for watching.